Hello, security token market. Welcome back to another Insiders interview. I'm joined here with Graeme Moore, the head of tokenization at Polymath. Graeme, thanks so much for being here.
Thanks for having me, Kyle. Appreciate it.
So I'm really excited to talk with you guys because Polymath certainly has been a name in the industry for quite some time. I remember there was headlines about how big the support in the community was around your initial launch way back in the day. Could you just kick us off by walking through your background and experience and how you got involved with Polymath and what's going on there?
Yeah, for sure. So myself, before I was at Polymath, I was in the financial services world, so working at an investment advisory firm. Prior to that, I was at a bond fund up in Canada. So a lot of the Polymath team is actually Canadian. Not sure if most people know that. And so really just being kind of in the Bitcoin space in Toronto, falling down the rabbit hole back in 2015, become obsessed with all things crypto and blockchain. I met up with the founders of Polymath back in kind of the summer of 2017. And I said, "Hey, what's Polymath?" They explained it to me. I said, "Wow, that's an amazing idea. That really goes right up my alley of being excited about financial markets, but also being kind of disillusioned with how opaque and slow and archaic everything is in the financial markets." And so saying, wow, we're actually going to upgrade what happens in the financial world using the technology that I've fallen in love with over the last few years called Bitcoin. And so that was really how I came to Polymath. Initially really focused on marketing. And then my role kind of transitioned a bit more into kind of business development type stuff, but now really back focused on marketing most of the time.
Interesting. Very cool. And so Polymath is based out of Canada. And why we've all been so excited about it is that you're a security token focused protocol. So what do you, in your opinion, what does that mean? And how are you kind of creating value to owners of real assets?
Yeah. So initially, really, we built all of our technology on Ethereum. And what we said is, okay, there's these things called security tokens that are sort of starting to pop up. There's, Science blockchain, blockchain capital, Braid, I think was another one. And we looked at the code for all of those and we said, okay, well, every single asset issuer is just creating their own ERC20 token. They have no idea about anything like transfer restrictions, 12-month lockups, volume transfer restrictions, ensuring that they've done KYC properly, not only in the primary market, but also in the secondary market. We said, well, someone needs to just create a really easy to use interface that just replicates the same technology over and over again. And so that was what we started building. We called it the Polymath Token Studio. So any non-technical user, they didn't have to be a developer. They could go to an interface and they could say, I want to create a token. This is the ticker symbol. This is the name. This is the supply. This is who can and who cannot hold the token. This is when I want to make a dividend payment. So we had the ability to create a snapshot of the token holders and then issue a dividend payment correctly based on who holds the token at that specific point of time. And so we said someone needs to build that, and that's what we started building. So Polymath Token Studio launched early 2018. And since then, there have been over 200 security tokens created using the Polymath Token Studio. And so that's been really, really cool to watch people actually use the technology that we built on top of Ethereum and create their own security tokens. And one thing that happened as we started building the Token Studio was, okay, well, now there's all of these other competing token standards that are starting to come on board. So, initially everyone used ERC20, but they realized, okay, there's no transfer restrictions or anything with that. And so then we built ST20, which, just security token 20, just rhymes nicely with ERC20. It rolls off the tongue. And then we saw, Securitized DS protocol. We saw Tokeny create, I believe it's T-Rex. We saw TokenSoft create their own protocol. We were seeing all of these companies create their own protocols. So, well, this doesn't really make any sense. ERC20 really took off because an exchange has to integrate one ERC20 token, and then they can easily integrate every single other ERC20 token. So we said, well, there needs to be one standard that everyone can adopt. And so we started building ERC 1400. And so how we came up with the idea of ERC 1400 is we held something called the Security Token Roundtable back in the day, where we had a ton of different people come into a room. And so there were transfer agents, KYC providers, lawyers formerly at the SEC, broker dealers. We actually had Fabian Vogelsteller there, who's the author of ERC20. And we said, what should this thing look like? And so we said, okay, well, it needs to be an umbrella of various standards. And so that was something we didn't realize early on. We just wanted to make, kind of one ERC 1400. But we realized, okay, we actually need to chop it up into different things. So here's the document management standard. Here's the transfer management standard. And so all these other things. And so that was something we went live with. And now ERC 1400 is the most widely implemented standard on Earth. So Consensus has their own implementation. The government of Norway has experimented with it. The Icon blockchain actually ripped ERC-1400. Now it's on the Icon blockchain. I think Fireblocks uses ERC-1400. So there's a ton of different protocols, and we don't even necessarily know who they are because ERC-1400 is for everyone. It's not just a Polymath thing. It's for everyone to use. But then what happened is we realized, okay, ERC-1400 and Ethereum isn't necessarily the most elegant way to solve the problem for security tokens. And there needs to be a different blockchain that is used that solves a lot of these problems. And so we can perhaps go into the problems that we found later on, but really we found 5 key issues. One was governance, specifically related to forks. So imagine if you have a security token on Ethereum, and then there's a DAO hack or something, and now there's 2 forks of Ethereum. Well, now you have 2 security tokens on each chain. Which one's the real one? You have no idea. Do you decide the chain with the most hashing power? Do you decide, okay, well, let's just freeze the token for 6 months, and then we decide which one Lord Vitalik decides is the correct chain? You don't know. Second issue we found was identity. So on Ethereum, all these other blockchains, everyone's pseudonymous. Everyone's a 0x123 ABC. So on Polymesh, you actually have to pass a KYC process to onboard to the chain itself. Then also confidentiality of assets is a big one. So we actually have a patent pending protocol to deal with confidentiality of assets on chain, where you can still maintain the compliance criteria of security tokens being transferred while still maintaining confidentiality of the price of the asset that's being transferred and how much of the asset is being transferred. Compliance is another big one, of course. And so I mentioned ERC-1400 and all these other protocols built on Ethereum. It's very, very computationally expensive to do security tokens on a chain that wasn't built for security tokens. And so we started running into Ethereum gas limits kind of in year 1 of building what we wanted to build on Ethereum. And so you can only imagine what's going to happen in year 5, year 10, when you want to automate every single process of a token and you want to ensure that compliance criteria can be upheld. And so on Polymesh, a lot of that criteria and a lot of that compliance is baked into the base layer of the chain. So it becomes a lot more scalable and a lot more cheap to use. So updating a whitelist right now on Ethereum with ERC-1400 can cost between, call it $50 and $100. On Polymesh, it costs about a penny, right? So orders of magnitude better. And then finally, I already said governance. Finally, settlement was the other big one that we looked at. And so this was something where we were talking to large financial institutions over a few years. We were saying, why aren't you using this tech yet? Kept saying, okay, well, this is a huge issue for us. And so the easiest example that I used to illustrate this, do you remember when Visa bought a CryptoPunk? Did you see that?
Of course, yeah.
So Visa bought a CryptoPunk, and then I sent them a Poly token. Right now, Visa has to figure out, how do we deal with this one Poly token on our balance sheet? Do we treat it as an asset? Is this a taxable event for us? Do we have to liquidate it? Can we even deal with the company called Polymath? Don't know. Can we deal with this token called Poly? Don't know. A bunch of people sent them other random NFTs. And the idea there is, on Ethereum and a lot of these other general purpose blockchains, you have to receive every single asset that someone tries to send you. And that just doesn't work when you start talking to Goldman Sachs, JP Morgan, et cetera, about using security tokens. And so on Polymesh, every single time you attempt to send a security token from one asset to another, from one address to another, is both the sender of the asset affirms settlement instructions and the receiver of the asset affirms settlement instructions. And so that was another huge thing that we didn't realize early on when we started building on Ethereum. But once we started talking to more and more large financial institutions, they said, these are these 5 issues that we really, really care about. And that's what we think we've done with Polymesh, is we've helped alleviate a lot of those concerns that was holding institutions back from the security token world.
Interesting. There was so much to unpack there. You've got my mind working. Yeah. First off, I want to start with a really basic question that has nothing to do with your answer, just because I think it's fun to ask. Can you just give me your definition, or what you think, what is a security token? How do you define the term security token?
Security token is something that needs to be regulated like a security that exists on a blockchain. So whether that's an equity, a bond, a revenue share agreement, a fractionalized NFT that perhaps might run afoul of securities laws if you don't do things like lockups and ensure there are the right kinds of investors from the right countries. It's just anything that needs some type of regulatory compliance to exist on a blockchain.
So I think that's an interesting point, and I want to hear your thoughts on this, because not to be semantic and certainly not to point any of those kinds of questions and make this a gotcha kind of situation. But I think that there was a real scenario. We're OGs in the security token space, right? We've both been here for a long time, and there was quite a a discourse around this idea of a compliant ICO, right? Where it was a utility token. There was no underlying asset, no economic rights to anything, but they followed the securities laws, so they would call themselves security tokens. Do you see that falls into that basket, or would you make a distinction there?
I'd probably make a distinction there. So perhaps I would maybe augment my answer by stating, that there's some type of asset or underlying cash flow or something similar to that actually has to be involved. So if I give you a token and it represents literally nothing and it will never represent anything, then I probably wouldn't call that a security token, even if we ensure there's a 12-month lockup or something like that. Right. So I'd probably augment the answer there by saying there's some type of asset, some type of thing that you're purchasing, or either you hope it goes up in value later, or you're hoping to accrue some type of dividends or cash flow or rights associated with that token.
Right. I'm on the exact same page. And just for anyone listening, I think that if you're talking about anything in this industry, I think one of the most important things about having a great conversation and a productive conversation is making sure everyone's on the same page about the terms that we're talking about, right? Because if we're talking about two separate things and we're not on the same page, you're never going to have a productive conversation because you're talking about two separate things, right? There's a lot of jargon, a lot of words that get thrown around. And so I'm in full agreement with that. From us, we look at it like we're talking about real financial assets that use blockchain to optimize the processes, to automate these, financial infrastructure, to make the compliance more streamlined and auditable and all these great things. But it really does come down to, is this an investable? Is this a financial asset at the end of the day? And if it is, then it should be treated as such. So with that, I want to talk about the 200 security tokens that you've issued thus far. Can you walk me through a little bit about what that deal flow looks like? What are those assets? What kind of issuers are they? And where they are in the life cycle of those assets? Are they trading X, Y, and Z?
Yeah. So I think I'll put a huge caveat on the question. We have not issued them. My legal team will definitely make sure that I'm saying the right things.
Semantics.
And so this is actually a big distinction between Polymath and a lot of the other kind of security token platforms, securitized token, soft token, et cetera, where we are not acting as the broker dealer in these deals. We're not the transfer agent in these deals. We are not issuing the assets. We've only built technology that enabled these other firms to issue assets either themselves or for broker dealers or transfer agents to issue assets on behalf of the issuer. So we are not issuing the assets. But to talk about some of those, the largest one, and we've talked about this a bunch in a lot of our marketing materials and whatnot, is a company called Red Swan, which I'm actually on the advisory board of. So Red Swan's tokenized at this point $2.5 billion of commercial real estate. So they're a US-based company. What they looked at, and so the founder Ed Nowakity, so he's been in the real estate game for a very long time, I think about 17 years or so. And he looked at these asset owners that primarily have multifamily properties. That was generally his bread and butter back when he was brokering deals. And he was saying, okay, a lot of these asset owners have $100 million asset. They want to pull $20 million of equity out of the asset. They have two options. Option one is they sell to a Blackstone, or another very large real estate fund, or they sell to, or they take debt from a bank. And what's going to happen in both of those scenarios is it's going to take a very long time to close either of those deals. And they're also going to get squeezed on a lot of covenants, and they're going to get very bad terms because that gigantic asset owner knows we're really the only game in town. And that bank knows we're really the only game in town. And even if you go to our friends down the street, they're going to offer you the same interest rate, and they're going to make sure that you give us the same covenants. And so Ed was saying, okay, well, what if there's this third option where the asset owner just sells the $20 million worth of equity to, essentially crowdfund it? So not necessarily a crowdfunding exemption with the Reg A plus, again, my lawyers speaking in my ear, but crowdfunding it to various investors who want to take down $100,000, $1 million, et cetera. And so that's what Red Swan is creating, is this platform where an investor can go and say, I want to purchase this one asset, but I don't have $20 million to invest, but I do have 50,000, or I do have $100,000, or I do have $10,000. And so they're actually investing in these deals kind of one at a time. And then they're collecting the 20 investors who don't necessarily care, and they're not going to negotiate for weeks on end about, okay, well, who pays for the lawn maintenance, or who is going to ensure that this light bulb gets fixed, which is what the Blackstones and the banks are going to do. And so the asset owner gets a much easier path to cash, and the investor gets access to a deal that they never would have had otherwise, because the investor really only could have looked at a much smaller property worth 50 grand or 100 grand, or they could only look at something like a REIT, which is very diversified. And so something I love talking about is, for example, what's going to happen in the future with tokenization is today, if I want exposure to, I'm in Manhattan right now. If I want exposure to Manhattan real estate, I can buy a REIT. I don't have enough money to buy a gigantic building in Manhattan yet. Hopefully, let's see. Right, but so I could buy a very, very small property for myself, or I could buy a REIT, which is relatively diversified. But what's going to happen in the future, where everything is tokenized, is I can specify the exact properties that I want and the exact property mix that I want. So eventually, I'm going to be able to pretty much type into some type of AI engine, I want to invest in every single property that is above the 7th floor, that's interior facing onto Central Park. And I don't want any other properties. I want you to spit all of those out. I don't want anything below the 7th floor. I don't want anything that even doesn't face Central Park. And I want it all below 95th Street. And so that's what's happening soon, is this hyper targeted, hyper focused method of investment, where because all of these pieces are chopped up and they're all interchangeable, and we have the ability to actually access them with, $10, $20, really, really cool things start to happen. So that's one thing I'm really excited about, is Red Swan using our technology to do that. Another company is MarketLend. So MarketLend is a debt-based marketplace in Australia. So company wants to borrow 10 million bucks. Investors are there on the other side, and they're investing in those offerings. They're, whatever, putting up 100 grand, et cetera. And so I think with those two, we've started to see a theme where we're starting to see these marketplaces pop up, where the marketplace doesn't want to build the blockchain. The marketplace doesn't want to build Ethereum. They don't want to build the Polymesh. They don't want to understand how all the transfer restrictions work. They don't want to build all the compliance criteria into a chain. They don't want to build a wallet. What they want to do is they want to leverage the technology and then do what they do best, which is be a marketplace that sits on top, connects investors, and connects asset owners. And so I think that's where Polymath and Polymesh's sweet spot really is right now, is having these marketplaces that build on top of our technology, where they're acting as, whatever it is, the broker dealer, the ATS, the transfer agent, et cetera, and they're connecting the investors to the ultimate asset owner.
Interesting. I like that model a lot. And your analogy makes a ton of sense. It's something that I share. What excites us about security token market is that we want to try to position ourselves as the Bloomberg of the industry, right? And being able to source a lot of this data and potentially provide trading tools, screeners, and abilities that you can get really in depth on these types of investment vehicles internationally and really start to get specific. But real estate just makes total sense, right? The idea that you could go long on Miami real estate, you could short San Francisco real estate, and you could go long on, the tech sector in, wherever that is in a different European country or in India or somewhere else, and be able to invest more specifically in those types of things is fascinating. Makes a ton of sense. So I think that what I want to hear a little bit more about is, tell me about the journey from going from Ethereum to Poly and what the differences are in those two. We started to talk about it from a high level of realizing the limits of Ethereum. Certainly, I think that those are pretty well documented in terms of the expense from a gas fee perspective, the fact that it can't handle a ton of transactions, different things like that. But from how does the Poly, you have your own token now, Poly, is it Polyx? What's the relationship between Poly and Polyx?
Yeah, so I'll tackle the Polyx first. So Poly is a token we created that exists on Ethereum. So it's an ERC20 token. It's really to pay for access to the smart contract. So that was one thing that was really nice, was we didn't have to have like a 20-person business development team ensuring that everyone's paying us our monthly fees or anything like that. It's just ping the smart contract with the Poly token and you get your security token back. Ping the smart contract with the Poly token and you make a dividend payment. And so that was really, really cool to start to see. That was one of the first dApps, really. dApps were starting in 2017, sort of on Ethereum. Obviously, there were a couple before that, but they were really starting to come into their own around that time. And it was cool that we actually built one of those on Ethereum. And so then what we've seen is, okay, once we started to figure out we actually need to build our own blockchain for this thing to really take off, we needed to at least honor those poly holders that are using the smart contracts to create their security tokens, we need to make sure that they still had access to the ecosystem and to use the tools that we created for them. So what we did is we created a one-to-one upgrade bridge where if I have 5 poly tokens on Ethereum, I can upgrade them and they become 5 Polyx tokens on Polymesh. So Polyx is the native protocol token of Polymesh. Polyx is to Polymesh what ETH is to Ethereum, what Tezos are to Tezos, et cetera, et cetera. So Polyx is really the fuel for the Polymesh blockchain. That's how you create security tokens. That's how you send transactions with your gas fees. That's how you engage in staking on the chain. So it's a proof of stake chain. So that's how you provide security to the chain. You get rewarded in Polyx when you stake the chain. And then you can also engage in governance on Polymesh as well. And then in terms of kind of the journey, I would definitely describe it as a journey. It's been years now. I think we started talking about Polymesh back in, I believe it was 2019. I think May 2019. But yeah, long time coming. 2 years of building these technologies, now 2.5 years of building a technology. It's really been a journey. We've seen a lot of different things, and just a huge shout out to our technology team for sticking it through and coming out with a product that we think is really, really great. That's now starting to attract a lot of interest from some big institutions.
Interesting. Cool. So you've had this journey, you've had this experience. Can you walk us through the experience if you were an issuer looking to leverage the technology? How does that work? Because I certainly know that from my experience, we have our sister company, Security Token Advisors. So we see many different issuers coming through the pipeline that are looking to explore how to leverage tokenization. And I think that the journey has been something for each individual asset issuer that I think is to some degree, the tech component is really important. I mean, to a tremendous degree, it's important. But there is a level of handholding that does seem to be needed by non-blockchain literate issuers, I think, and not even to be disrespectful, but just for people that are still new to the tokenization space. So if an issuer is looking to leverage, a security token to crowdfund and they've got their business model successful, how does that process work with Polymath? Do you have other partners that you work with to help kind of walk them through that process? How does an issuance kind of take place, from a high level, and then we can kind of go into details.
Yeah, so there's a couple different ways, and I would even add on to that where you mentioned, non-blockchain natives need someone to handhold. I think everyone needs someone to handhold them when they're issuing an asset and dealing with financial regulations. And so for us, that was something we recognized early on, was there needs to be the broker dealer, there needs to be the advisor, there needs to be someone who understands this side of capital markets, because ultimately we understand that side of capital markets, but that's not what we specialize in. We build the technology and we rely on folks like yourselves and other broker dealers and transfer agents and ATSs and whoever to understand that specific side of the market. We do not look through people's passports all day, because that's not our bread and butter. We rely on right now Netkey and Fractal to review people's passports and to ensure that they live where they say they are. And so the issuer journey today, it really depends a lot on the issuer and what their needs are and where they live and the jurisdiction of their investors and what type of regulation they're going to issue their asset under. And so it really does depend. But let's kind of group them into 2 different categories. One would be
single asset and marketplace. Is that kind of the 2?
Pretty much. That's sort of how we look at it as. And so there's the single asset issuer. They go to tokenstudio.polymath.network. They can click some buttons and they can have a token in 15 minutes. So that's one. Of course, we recommend they speak to legal counsel before they do that. We, of course, recommend they speak to a broker dealer before they do that. And hopefully when they come to us, they already have spoken to them. And then the broker dealer is walking them through it and they're saying, oh, what does that restriction say? Yes, that's the one you want to do. And that's how you want to click that button. And so that's kind of the one aspect. The other aspect, and this is the one where we've seen way more uptake, and this is the one where we've seen way more interest and way more big dollars coming, is the companies that are building on top of us. And so initially, really, the Token Studio was a proof of concept. It was saying, hey, everyone, here's what you can build on our technology. And then just so many single asset issuers kept coming and saying, oh, I want to keep using the Token Studio because it works for me. The buttons are easy to click and there wasn't really another option. But now what we're finally seeing is there's the red swan. So the asset owner doesn't come to Polymath. They don't even necessarily have to know Polymath exists. They don't have to know Polymesh exists. They don't even necessarily have to know there's a blockchain. They talk to Red Swan and Red Swan says, hey, we'll do this all for you. The company looking to issue $100 million of debt in Australia, they don't talk to Polymath. They don't have to know Polymesh exists. They don't have to understand blockchain. They talk to MarketLend. And MarketLend says, we'll do all this for you. And they're just saving money on the back end using our tech instead of some paper in a filing cabinet somewhere. And so that's the more interesting avenue where we think there's a lot more interest. There already is more interest today, and where it's just a lot easier because, especially from a business development side for us, instead of us having to talk to 50 issuers to get $1 billion, we talk to one Red Swan, and then we have the $1 billion. And so it's a lot easier to deal with these individual companies that are regulated themselves, that are walking through the issuers on the specific deals. And then once you educate them once, they can do it for the next client and the next client and the next client. And so that's the approach that we've taken to really leverage ourselves, being the experts in technology and not really wanting to build out, full capital markets type advisory arm.
That's fascinating. And I think it's an interesting strategic position. We've seen, one of the more dominating business models in the security token space thus far is trying to vertically integrate as much as possible, especially from a licensure perspective, and trying to acquire as many of the pieces as possible to reduce friction. So it's interesting to see your approach of kind of keeping it a little more open source, and not open source, but my analogy that I'm kind of referencing, that kind of open platform for anybody to be able to leverage that in a cost-effective manner, I think is interesting and makes a lot of sense.
Yeah, and I would say we almost undoubtedly have the most detailed and easiest to integrate SDK on the market. Right? So SDK is software developer kit. We've built the blockchain, and we build the SDK on top of it, and then anyone can plug into the SDK, and they don't necessarily have to understand how blockchain works. They don't have to know what block times are, or really how a proof of stake mechanism works and rewards and whatnot. They just plug into the SDK with JavaScript, or TypeScript, and then they're kind of off to the races. And so that's the other thing that I think we've done a great job at, it is making it easy for non-blockchain companies to start building on top of blockchain without necessarily having to understand how the blockchain works.
Right. That makes a lot of sense. And so maybe to wrap it up, to kind of bring it to the other side, because I think everybody loves secondary market trading, and that's what kind of, I think it's just is the logical next step here. Where do you see that going from here? How do you think that plugs in to this whole equation? What's kind of your view on the secondary markets?
Yeah, secondary markets, of course, are very, very exciting. And if you actually go check on the security token market, there aren't any of our tokens there yet. And so of course, we're very sad about that. Coming soon though, right? And so I think what we've seen, at least with kind of the marketplace approach that we've been taking, is there's going to be more and more of these companies that have their own kind of ecosystems where they're specialized in their specific type of asset class. So it's been really cool, for me to see, the realties and whatnot on Uniswap. That was, when I saw that, I was like, oh my God, that's amazing. I actually kind of want to go buy this, $60,000 house in Detroit, and I want to go test this out on
Dude,
Uniswap.
10%
really,
dividend
really cool.
is pretty nice too.
I know. It's very, very cool to see. And so obviously that's going to continue. And then obviously the T0s of the world, they're going to continue, and we're going to see the kind of centralized marketplaces that exist for the big exchanges. What we've seen, and what's been sort of a bigger focus for us, has been kind of the red swans in the marketplaces, or in the market lens, where there's a company who has a very specialized niche. Red Swan is multifamily properties, generally in the US. MarketLend is debt-based offerings in Australia, where they have to have very, very specialized information to relay to the secondary investors that want to purchase something. If I was on the NASDAQ, for example, and I see Google, Apple, I almost swore, sorry. Google,
we're good.
Apple,
we like it raw and
Apple,
uncensored.
And a few other companies. And then I see, $2 million debt offering from a company I've never heard of. Right. I'm probably not going to buy that.
Yeah.
And so we're starting to see very specialized marketplaces in the secondary market, at least for the time being, in the security token world, where a lot of these offerings are private to begin with. And so a lot of learning needs to be done, and there needs to be a lot of investor education. People think that liquidity just appears out of nowhere. I create an asset and there's magically liquidity. No, you need an investor education program. You need an investor relations team. You need to educate the market about what you're doing. And we're finding that these marketplaces are actually pretty good at doing that. Where they have an investor who wants one specific niche asset, they're probably going to want another one of those, whether it's real estate, whether it's debt offerings, whether it's horses, whatever the case may be, if you want one of these assets, you probably want another one. And so again, as I've been harping on, I think we're going to start to see more and more of these marketplaces that get their own ATSs. And that's where they do a lot of the trading is in their kind of individual ecosystems.
Right. Kind of internally, they keep it closed loop.
Yeah.
Cool. Well, I like your perspective on that. I'm excited to hear you guys have a great SDK. We're scaling out our data science team. That's been a big focus for us in 2020 or 2022, excuse me. And so hopefully we'll be able to continue to integrate with you guys on the primary side. And as soon as those things get done on the secondaries, that we're going to be the first ones on the case to make sure that everybody knows about where that's coming from. So definitely it's a priority. But thank you so much for joining us. I think that we'll kind of leave it as an open floor. Anything else you want to talk about? Where can people find you? How do they stay in touch with you? How do they get involved with Polymath? And anything else you wanted to kind of mention before? I'm sure we're going to do this again because I've had a great time.
Yeah, sure. So definitely go check out our website. We have a ton of resources, whether it's Security Token 101 or very in-depth white papers on how cryptography works for the Mercat system, which is how we maintain confidentiality on a blockchain. A ton of resources. So polymath.network or polymesh.network. So we've got websites for both with specific resources for both. And then also on Twitter. So Polymath Network and Polymesh Network are our two Twitter handles. Those are probably the best places to find us.
Amazing. Well, Graeme, thank you so much for joining us. It's always good to talk to you. And we'll certainly do it again soon.
Awesome. Appreciate the call. Thanks.